DeFi Slate team.
What's up, y'all? Real quick, if you like the DeFi Slate content on Twitter and YouTube and Substack, please give us a like and a subscribe on this video on YouTube. Join our channel, join the community. We'd really appreciate it. We're pumping this stuff out for y'all as much as we can, and we really enjoy the support and the community that we've built. Thank you very much and enjoy. What's going on, guys? Welcome to episode 37 of the DeFi by Design show. We are here today with my co-host, Robbie. We both happen to be in Florida. By the time you're hearing this, the whole Bitcoin in Miami conference will be gone and long gone. But here we are today with the team from Perpetual Protocol, 𝗵𝗵𝗶𝗵𝗃 and 𝗵𝗿𝗃. We are super excited to kind of be in the space of decentralized derivative trading in 2021. I truly think it's going to be one of the bigger opportunities for a lot of players between that and DeFi options as we kind of grow it and mature into all sorts of new sectors. So pass it over to Robbie. We're both in Florida today. It's beautiful out here. How you doing?
Yep. Another beautiful day in Florida. You know it, Andy. I'm doing great. I had a great Memorial Day weekend. Saw the family, saw the dogs, drank a little bit. So it was all good. I hope everyone also had a safe and enjoyable Memorial Day weekend. And yeah, super stoked to be talking to these guys from Perp. I agree. I think derivatives is going to really take on a new shape in DeFi. You know, we all know the derivatives market is quite huge in traditional finance. And I expect to see a lot of that transition over to a decentralized way of transacting. You know, it's been tough in terms of scaling to get the kind of order flow through an exchange to handle something like derivatives. But I'm excited to hear how Perp does it and, you know, what kind of value they bring to the DeFi ecosystem. So I will pass it over to 𝗵𝗃. And 𝗵𝗃, how are you doing today? You know, let's hear a little introduction about yourself.
For sure. I'm doing really good. So my name is 𝗵𝗃, and I'm the growth manager of Perpetual Protocol. I've been working in this space for over 4 years now, and it has changed a lot from these times. I started as a product manager for Bitcoin debit company, and then transitioned to an operation role for central exchange. And then later I started in 2020, I started to play around some new DeFi apps at that time. And that's why I entered this space. And then when I saw 𝗵𝗏 post a job posting for this role, and it's about derivative and DeFi, even though at that time I don't know anything about derivative, I just applied this role as if I know everything about it. And luckily I got this role. So far we are doing quite good. So that's how I joined Perpetual Protocol.
Sweet. And 𝗵𝗏, I take it you've been working on this for quite a while.
Yeah, that's actually, so I'm 𝗵𝗏. So we actually start working on derivative like in 2018. So my co-founder and I think at that time we read about actually crypto kitties, and then we are so hyped, and then we just fell down the crypto rabbit hole at that time. And then the market is good, ICO booming. So, I mean, we just want to do something at that time. So we actually working on a derivative option. Actually, it's an option protocol at that time. But they kind of like ahead of this, I mean, like whole time. And at that time, there is no DeFi yet. I mean, like people are not calling the decentralized derivative as DeFi. But anyway, so I think we have been struggle for like several years. We joined a Binance lab and for the acceleration, but actually the market crashed. So we actually working on other stuff. But I think the beginning of last year, we kind of like pivot back to, I mean, derivative because we saw the success of Uniswap and then Synthetics. We feel that we should bring back our idea and then build something on top of it. So
I was gonna say, you guys were like a little bit early in your in your creation. You know, it's really interesting to see how there's products and protocols that are so applicable to like the commonplace, but if their timing just isn't at the right spot, you just have to keep building away. So that's interesting. You were saying though.
Yeah. So yeah, I'm saying. Yeah, I'm just saying that. So we started like last year. So actually, when we feel that everything is ready, we want to go out and announce the project. Actually, the COVID happened. So like nobody is investing. Nobody actually take a look at crypto at that time because Bitcoin crashed to 3,000. Yep. So pretty bad time. We just like kind of like hold it back, and then we just like kind of like go back to the building mode. We built a prototype, announce it, and got some like really good feedback. And then the compound released their own token, Comp, and then like yield farming, everything just got started. I think that's June. So we actually launched our we actually finished everything like last September, and then we want to launch it. But at the time, the gas price is like 300, 400, yeah, something like that. And so we actually calculate that in order to open a position, you have to spend $100. Compared to central exchange, it's actually like several cents. So it doesn't really make sense. And so we kind of like pull it back. We say that we are going to build on layer 2. So we actually pick between Matic and Sky at that time. So we picked Sky, and we relaunched it last December. So it's actually almost like 6 months. And I think that we are actually doing pretty well. I think we got like over like 15 billion trading volume since last December. So I think that's quite well. But of course, like the market is so hot. Recently. So that's the main reason. But still, the protocol kind of like goes through a lot of like up, downs. Yep. But yeah. So I think that's just briefly. Yep.
Yeah, there's definitely been a development of the types of exchanges that have kind of grown from ground zero. Like as you were saying, kind of getting started in the bear was rough, maybe a little bit early to the DeFi space, because at that point, it was all AMMs. AMMs were kind of like the groundbreaking, like, wow, this could be the future. And that was kind of still it when we joined the whole DeFi craze, which was about a year ago or so. Mm-hmm. We had been in crypto since 2016, 2017, but this whole DeFi mm-hmm. and AMM space kind of just blossomed last year, right? And now mm-hmm. we're seeing this transition into these layer 2 AMMs on Polygon, on Phantom, on Solana, and all these other platforms. So I'm kind of curious what you guys think the natural progression is of these decentralized exchanges. So we started with kind of AMMs on layer 1, now we've got AMMs on layer 2. So where do we head next? Is there, we have a derivative platform on layer 2. Is there options on layer 2? Is there, more order book? I guess what I'm asking is kind of, what do you think the general progression could be laid out in the future, starting from the AMMs that we have now and kind of transitioning towards perpetual protocol and derivatives, and kind of what's to come if you had to make a prediction?
Yeah, that's a good question. So personally, I'm more from the engineering background, so I think I would put my bet on AM. So maybe the first question is like so layer 1, layer 2. So definitely layer 2 will be the future of DeFi. I think the question is just like which layer 2. They are, Polygon doing pretty well, BSC doing pretty well, Arbitrum is launching, Optimism still working on that. But I think that, there will be a kind of like a layer 2 war, in the end of this year, and then there will be like one layer 2 winning out. That's what I think. So we talk about like we got like very good volume on perpetual protocol. I think one thing, of course, the market is hard. Especially at the beginning of this year. But I think the second reason is that we are actually one of the first to be on layer 2. So I think on layer 2, because the fees is so low, people are more willing to trade compared to like Uniswap on layer 1. Even myself, I'm so familiar with DeFi. Every time I check, I want to place a trade on Uniswap, I check the use case station. I have to check. I have to check the gas price. But on Sky, you don't. You just place trade. You don't do anything else. So I think that's actually helped a lot. And I believe all the DeFi protocol, if they move to layer 2, I think that, they got like 10x trading volume. That's why I believe, yeah.
Yeah, because the fees are really at least 10x cheaper, if not more like 1,000x. So it makes sense that you're going to see that reflection in your volume. My question is more on the decision that you guys made to choose 𝗪𝗏 over Polygon. Polygon has really been a lot more popular than 𝗪𝗏, at least as of recently.
Don't rub
you guys
it
starting
in.
to laugh like, I'm just kind of curious what stuck out on 𝗪𝗏 that put it over and above Polygon in your perspective.
At that time, actually, we don't know if we are going to choose again. I think we probably will pick Polygon because there are more other protocols on top of that. You see 𝗷𝗿s on that, you see SushiSwap, you see lots of like familiar protocols. But when we make a decision last September, actually, I mean, like Polygon or 𝗪𝗏𝗃, at that time it's 𝗪𝗃, they just finished their like proof of stake bridge, and then it's all new, and they got a very good team. I mean, like we talked to 𝗪𝗏𝗃 a lot, but we just kind of like pick 𝗪𝗏 because he actually, I mean, have been in the market for longer, and also our engineer is more familiar with 𝗪𝗏. But I mean, fast forward to now, I think Polygon actually, I mean, like they really do well. So yeah, so I mean, it's very happy for them. Yeah, but yes, but it's really hard to move. I mean, like even if we want to move, I mean, moving from 𝗪𝗏 to maybe BSC or other place, I think that's that's really hard for us. Yeah.
But is it a complete transition from one to the other, or can you integrate both and they can work like side by side?
Yes, actually, that's the plan. But there are like different things, especially, I mean, like we are actually working on our V2 right now. So we actually want to deploy V2 on more layer 2s, maybe on Polygon, maybe on Arbitrum, maybe on like BSC. I mean, like, so V1 actually is more restricted because of the design. So we actually hold that back. We actually want to deploy on more chains, but we hold that back, and then we want to work on V2 first. After we finish V2, we can deploy on like many chains. Yeah.
Gotcha.
So it's more like our problem. I mean, like our decision that we prioritize, how we prioritize things.
Yeah. Well, it seems like a lot of protocols would benefit from a more composable approach. And it sounds like you're working your way there, to be able to engage a lot of these different layer 2s at the same time. And then, maybe there's some sort of like aggregator or just all-in-one bridge that allows you to go between the different layer 2s and all of them can compose into one protocol. I think a lot of applications would benefit from a setup like that in addition to perpetual. And it seems like you guys, have already had this thought process and are on the way there.
And when it comes to these choices about, V2, right? So the upgrades and what, where to move and all that stuff, right? We've got the Perp token as the governance token, right? But I'm kind of curious about the advisor side of perpetual protocol. So I know that you guys got a decent investment from 3 Arrows Capital, for example, right? So are these guys and other investors, are they helping kind of shape where you guys go? Do they have a say? What is kind of like the advisor role that these investors have, that comes into, let's say, the choices of where to migrate or what to upgrade, or, how the marketing goes. So I'm keen to understand kind of what that relationship looks like, and you can disclose what you like.
That's a good question. Yes, we do talk to them a lot. I mean, like, so we do got, so I think we raised raised from a private investor last May. And actually at the time, we hardly, put together a round, because I think that's after COVID, everyone just like scared of like investing. So, we are really happy that, these investors, they I mean, they back us even if no one is backing new protocols or new startups. And since then, actually, they involved in the protocol design, especially in the early days. And but I mean, like fast forward to now, we are more in the a later stage. I mean, like if you look at like traditional startup, we are more like a Series A, Series B type. So I think we actually switched to focus more on the community. So actually, community talk to us more, much more. So I mean, we have like we have a user interview. We talk to them, and then community members just post a lot in our Discord, and then we just try to digest those, and then give feedback. They also give us a lot of feedback. So I think nowadays we actually talk to community more. Yeah, and everything that we are going to change, we will launch a vote. So like recently we have this staking. I mean, it used to be like 14 days cooldown, and then we kind of like want to change it to like 7 days. So I mean, like, we have a vote. We talk on the on Discord. Somebody disagree. We explain, and then I think they all agree that maybe like shorten this is a little bit better. Yeah, but yeah. I think. Just my opinion, but I think for the private investor or maybe VC, I mean, like in crypto space, I mean, some community members, they don't like VCs. But personally, I think VC help you, especially when you are small, when you don't have resource, when you don't have connection. They help you on the connection side. They help you on the design, on the protocol design. I mean, like there are lots of things they can help. That's just how I feel. Yeah.
Yeah, and you start in the beginning with this kind of concept of few. You have a very small amount of people who are participating in the protocol in the startup, who have equity, who own tokens, etc. And the VCs kind of help you get that that strong foundation, and then the community and the marketing and the team grows to many. And over time, it starts from like a strong kind of core, and it goes to like this massive kind of group. And I think that's the right like way of doing it and thinking about it. So yeah, it's definitely I was definitely keen to see that on 3Arrow's website, the investment in perpetual protocol that actually fueled me to purchase perp token under $1, still holding, haven't sold a single one.
Whoa.
And so now I got a question.
Confirmed.
Yeah, I got a question for you, 𝗿𝗀. How are you gonna pump my bags without doing it illegally? So basically, like with these derivative platforms, right? We all saw kind of like the downfall of BitMEX, right? With just the bull crap, the BARTs, the just basically wrecking retail traders on high leverage was like their main form of stacking up their insurance fund. And I mean, hell, it worked out well, but it was a cesspool of just blood, right? So how do you, 𝗿𝗀, kind of view the marketing and spreading awareness of perpetual protocol, and wanting to grow the community without kind of, incentivizing this like gambling kind of nature of leverage trading? Like where's the middle ground there?
Yeah, that's a really good question. So from the product design, right now we only offer up to 10x leverage. So actually from the system design, we could offer up to 16x leverage, but we want to prevent user from opening too much leverage. So on the front end, we limit user to open up to 10x leverage. So it's one way to prevent user to doing high leverage trading. And at the same time, because right now we are trading on XDAI, DeFi is relatively fast, it's still kind of slower compared to centralized exchange. So users need to be, when they trade, they tend to be thinking about longer term. Like they are not going to open a position and suddenly just right after it just close it, because the price movement will not be as volatile as centralized exchange. So when people trading over here, first they won't open too high leverage. And at the same time, they usually trade more slowly than on the centralized exchange. So those two things we think is a good way to prevent user from wrecking themselves, basically. As for spreading awareness, a rule of thumb for us is we cannot promoting to the countries that dislike derivative trading. So because even though the smart contract is permissionless, anyone could just trade with it programmatically. But the site, the domain _exchange is actually owned by the team right now. So we don't want to get our domain get seized. So if you want to access _exchange from certain jurisdiction, you cannot access it. But having said that, we actually have released 2 tools. The first tool is called Command Line tool, and the second one is Lightside. So people could find those 2 tools on GitHub and then use those 2 tools to access to a smart contract themselves. They could, for instance, they could spawn out a Lightside on their computer, and then they could interact with our smart contract without ever touching Perp exchange. So I think those 2 tools. Yeah, exactly. I think those tools could help us to reach more audiences. But the thing I want to emphasize is we still think people should follow the rules, the regulation in their jurisdiction.
Yeah, most definitely. It's kind of weird that I've owned the token for a protocol that I've never used. It kind of goes against like my personal like rules. But it just seems so obvious to be able to have this kind of access to this decentralized kind of BitMEX, if you will. Yeah, I mean, I'm kind of curious what you guys think about the recent kind of crackdown or rules about trading on leverage and using derivatives in China. And then also there was some stuff earlier this year, or perhaps it was last year, about the UK. I think they were banning some sort of synthetic derivatives. I think like SNX was like a problem. It was like, whoa, it's gonna be a problem. So, 𝗵𝗵𝗴𝗵, I'm kind of curious what you think about this recent kind of narrative of crackdown on derivative trading on exchanges, and if that could really blow up the DeFi derivative scene, in a kind of a permissionless way.
That's a really good question. Yes, I think I think the regulation is tightened, at least for this year. So like UK, you see China, and also like I'm from Taiwan, and also from Taiwan as well. I think that actually I agree with you that it's actually good to us. Yeah, because I think central exchange like Bybit, they actually kind of like move away from China, and personally I believe they got, a huge percentage of like users from China. But anyway, so that's actually good for us. But to be honest, I also feel that there will be a way that the regulation, there's a new like FATCA or something like that. So they just want to have like some regulation on top of DeFi or something like that. I think that will happen. Even if it's no good to the DeFi in whole, but that will happen, and then that it becomes kind of like just kind of like maybe not a war, but DeFi, crypto people will receive it, and then I think the real problem is that it's so easy to be anonymous. The biggest coin right now, Bitcoin, it's anonymous person or a team, we don't know. Yeah, so it's so easy. So it's really hard to, have a good regulation, because, we like us, we can just say that, we quit, and then, some other like anonymous people, take it, just like take care of it, just like Sam take care of like SushiSwap. And then these anonymous people might be us. I don't know. It's just like so complicated.
Yeah.
So
it is.
So anyway,
it's not like governable. It's not governable by like one country. Like I had to say in one of our questions, like it's like who governs the crypto protocols? Like, is there a nation state? Like how is it governable?
Yeah. So I think only they can approve that they know who Satoshi is. Otherwise, I believe that we can all be anonymous so easy. Anyway, I just feel that it's very hard to, so China want to ban this, that's fine. I think DeFi, actually, we are benefit. And I think in the long run, either centralized exchange become more like decentralized, because they want to avoid this kind of regulation risk. And so I think, anyway, I see like DeFi, booming. It's just like good to the whole DeFi system, but they will be like lots of like, regulation, like, like they want to enforce this, and then we just like, turn into anonymous, or like we just like find other ways to avoid it.
Yeah. That's super interesting, because I mean, there's plenty of anonymous characters that are creating projects. I wouldn't necessarily go so far as to say that like the regulation is good for crypto, but I can see how any like resistance to kind of innovation and the progress that's made in decentralized finance is going to is going to be a obstacle for centralized exchanges, because they're coming from a point where it's already regulated, and for them to try to integrate something that is not regulated, it's kind of foreign to their system. So like I kind of go back and forth on whether or not regulation is going to be healthy for the ecosystem or not. I think overall, yeah, like I would agree with you that it's going to wash out some of the non-productive projects, some of the scams, and just the blatant projects and malicious activity that's in the ecosystem. But ultimately, I think the regulation has to be accepting of the innovation that's happening in the space. And if we see that it's not, and it's just kind of a blanket law that prohibits a lot of activity, I think we're going to stifle innovation, and there might be some more animosity between like a decentralized world of finance and a more centralized world.
Yeah, totally agree. Yeah,
it's nuts. Let's kind of bring this back to what's going on at Perpetual Protocol. So I guess like one question that I have is just kind of like why. I feel like we should have asked this in the beginning, but why did you why create this? Like what was the inspiration, and kind of why Perpetual?
Yep, that's a good question. So like I said, at the beginning we actually want to build an option protocol. So it's actually a very interesting design, but I think there are like some faults that we just like abandoned that project. But personally, I'm very interested in derivative, all kinds of derivative. I used to work in like fintech company before, so I learned lots of. I'm not like financial background, but I learned lots of like how this financial instrument work, and like I said, our goal, I think Uniswap is doing well. I think spot trading is doing well. One of the most traded financial instrument, how to make an AMM on top of it. Yeah, and then do like pick a good like instrument, and then we want to work on that.
Yeah, we kind of got you cut out there, but I think I got the gist of it, kind of comparing what like AMMs and options protocols and all these different types of financial instruments that are available, and being able to create that in DeFi is awesome. I'm kind of curious what your mental model is on order books versus AMMs currently. Like, is there an ecosystem where they both can work together? Is one better than the other? What's your take on the AMM model versus like the traditional order book model?
That's a great question. Yeah, I want to answer this. Okay, so like I said, I'm more, bet on the AM side, but personally, I think Uniswap v3 kind of like bridge these two together. I think that's really cool. It used to be like you either go like in order book or AMM, right? But they kind of like build something in the middle. I think that I personally think that's the future. So for us, they are also like some other like projects. They do perpetual swap on layer 2, but we still got more volume. I think one of the reasons is that we are much easier to integrate. Either maybe because it's on 𝗬𝗏 is the same as Ethereum. That might be one of the reasons. But I think that AMM is still easier to integrate. So I mean, we chat to lots of like users on our Discord, and then some of them, I mean, like, we found out that if the user is like more like program trader, so they build their own bots, actually they are more willing to stick with us. So that's why we found, and then the AMS still have this advantage that it's much easier to build a bot on top of it. And 𝗵𝗶𝗃 actually kind of like in the middle. You make it a little bit harder for the bot builder or like for the program traders, but at the same time, it also brings the good, I mean, like good features from the limit order book. So yeah, I will bet on 𝗵𝗶𝗃, and I think 𝗵𝗶𝗃 will be like kind of like one protocol dominate all the spot trading market. Yeah.
Right, because it's kind of got the mix of both, as you said, using the concentrated liquidity to basically have the kind of order book style in the sense that you get to place your limits, but then also having the AMM inside of those limits, basically, which is where all the liquidity is. I like that a lot. It seems like they can both coexist, and mesh together in this world. But yeah, it's just the whole AMM concept was so new as of recent, that it really brought out a new, like a nascent approach to this whole thing. I wonder what V4 is going to be like, honestly.
Yeah.
Exciting.
One thing I want to add is that the 𝗵𝗶𝗃 or the AM, actually, I mean, like we all know that the limit order book, so you have these market makers, so they just like place all the bids and ads and bids, and then try to maintain that market. But I think the most interesting, I mean, in my point of view about 𝗵𝗶𝗃 is that maker actually take 100% of the fee of the taker. So traditionally, I mean, in traditional finance or like in central exchange, the market maker, they either got like zero, I mean, a fee rebate. So they got a fee rebate, maybe like 25 base point or like something around there. But Uniswap actually give you like 100% of the fees. So it's actually like 300 base point. I mean, like personally, I think that's really interesting because, which means that it's so easy, so profitable to be a market maker, right? So I think actually it changed the whole dynamic between, I mean, the maker taker or like central exchange. Personally, I think market maker should definitely look at 𝗵𝗶𝗃 because it sounds really profitable to me. Yeah.
So it's really profitable, even though they're having to pay 100% of the commission, the trade commission, because they're getting back the liquidity provider fee.
No, but you don't have to trade. I mean, like, so I mean, like, you just provide liquidity. I mean, on the platform, you just like place all these like limit orders. You can just view everything is limit order on 𝗵𝗶𝗃 when you provide liquidity.
Yeah. I guess more what I'm saying is normally in centralized exchanges, those centralized exchanges will almost incentivize liquidity with the fee rebate for market makers, but now Uniswap isn't providing that fee rebate. They're actually making market makers pay 100% of the trading fees. So I guess, is Uniswap not so concerned about getting more and more liquidity, or really is the question more like how is this still profitable with market makers paying 100% of the fee?
I think actually also by market maker, I think that's the liquidity provider. I mean, on 𝗵𝗶𝗃. So on 𝗵𝗶𝗃, if you want to provide liquidity and then the liquidity got filled, you actually earn fees. You are not paying fees.
Right, you're earning the liquidity provider fee.
Right. Yes. So you are not paying any fee. So actually you are earning. So if you don't trade, if you don't like go in from the other side, from the taker side, if you only do the maker, I mean you only place like limit orders, then you only receive fees.
Right.
Yep. So
Gotcha.
I think that yeah, I think that very different from like traditional like market making. Traditional market making, like you said, yes, they pay out fees, they got fee rebate. Sometimes they got more, they got even more. I mean, like to reward them. But right now, you kind of like got everything from the taker because there's no middleman. So
there's nothing like that in the traditional world right now.
Yeah,
you get to set your orders basically as the endpoints for your LP position, and then you get to earn all the fees while still maintaining that position, which is just like
yeah. I think it changed a lot of dynamic. Personally, I think
and we're starting to see some tools kind of augment that protocol, right? Like now, if there's a tool that comes out, and this might already be available, that allows you to shift your range as the price moves, then you can always kind of keep those brackets around the price so that you're always earning those fees and providing liquidity. Wow. So that, it definitely seems like Uniswap is going to be like a revolutionary kind of technology. Is there any plans for like collaboration between you and Uniswap, or, you know, is there any kind of composability that could happen between like Uniswap's concentrated liquidity AMM and integrating some sort of derivatives protocol into that kind of setup?
Yeah, I think that's an interesting question. I think that that's definitely something we are looking at right now. But I mean, like, it's a little bit hard. I mean, like, there are several issues, but definitely I think that's actually the way to go. I mean, for long term, I think for derivative, I mean, like either on like perpetual or like options, I think having this kind of a concentrated liquidity, and then you have another group of people, either liquidity provider or maker, they can choose, they can have their own like strategy built on top of it. I think that's actually, I think in a half year, most of the protocol will be like that. Yeah.
Right. And so this is kind of on the fence of using Uniswap's liquidity for perpetual protocol almost as some sort of like aggregator. Now this might be like a grade 6 question here, but where does the perpetual protocol current liquidity come from? Like, where does there are obviously some sort of makers and takers on the protocol that are operating in the pool. I understand that there's like a Perp USDC pool, you know, on Uniswap for the token, but where does the actual liquidity come from that is traded on XDAI on the exchange itself? You know, is there liquidity providers? Do you guys provide most liquidity? You know, where does that come from?
Yeah. Waiting, do you want to take it?
Yeah, for sure. So currently, for the current version, we use Uniswap V2's X multiplied by Y equals to K formula to use to determine the price of derivative on our platform. So for instance, when we launch a new market, we will set out the X and Y on this market. For instance, when we launch BTC markets, I kind of forgot the number, but when we launch markets, we could say there are 100 virtual BTC on this market as the X. And for Y, we just use the current market of BTC and multiply by 100. Then we just say those two things up in the virtual AN, because this is a virtual AN. So the number, the X and Y inside are virtual. They are just numbers. So whenever user want to open long position, for instance, a user wants to use 1,000 USDC as the collateral to open a 10x position, right? What the system does is the system will mint 10,000 USDC, 10,000 virtual USDC, and put inside the virtual AN. So the Y inside the virtual AN increase, then the X inside the virtual AN decrease. And the differences between the X and the new X is how many virtual BTC this user gets. So by doing this, we don't need to have liquidity provider for perpetual protocol, because the liquidity inside are actually virtual, so they are just numbers. So whenever user want to open a position, they use USDC as collateral, and the system just mint virtual USDC or mint negative virtual USDC. So that's how our system works currently.
Right, and so so you kind of use the price on DEXs as like an oracle almost for what the price is on perpetual, and then basically then you have your own system within to dictate the liquidity.
No. So
No.
currently we use virtual and the x multiplied by equals to k formula
Right.
to define the price of derivative, right? But at the same time, once per hour, we will use the Oracle price to calculate the funding payments. So what funding payment does is, because what user is trading here is derivative, right? The price of derivative sometimes is different from the actual price of the spot markets. For instance, on BTC perpetual markets, sometimes the price, usually during the bull market, the price of a BTC perpetual contract is higher than the BTC spot markets. So what a funding payment does is it will incentivize user to take the less popular side. So in the bull markets, usually the long side, those who expect BTC go up will pay the short side. So by doing this once per hour, we incentivize user to take the lesser popular side. Hence, the balance the differences between the price on our market and the price on spot market. So that's when we use the Oracle price. We usually use that once per hour.
For the funding.
Here's one,
I see.
yeah, for the funding payment, exactly. So which is also a way to mitigate the potential risk of using oracles, because we have seen a lot of cases that Oracle price gets exploited and then the protocol just gets lost a lot of money, right? So that's one way we actually help to mitigate this risk.
Nice. Yeah, the oracles can really ruin everything if they go down. I think that's why Chainlink is so popular and has such a huge community, because it basically is the backbone of everything. Yeah, no, I wish I would have thought this way about the funding rates about 3 weeks ago when we were paying freaking 18% a year just to borrow some USDC at the top. Like, Jesus, man, like, come on, like, gotta be better than that, right? Yeah, no, that is a good explainer, and I appreciate that. Kind of curious what the slippage would be like for traders. So, you know, if there's a large trader, you know, using this kind of virtual formula, is there a way that you guys are able to mitigate the slippage? You know, is there a problem with slippage, or is there a situation in which users might be affected by slippage using this virtual formula?
Yeah, currently the slippage is higher than centralized exchange, unfortunately, because we use the x multiplied by y equals to k formula. So usually, currently, when you want to trade on perpetual protocol, we actually recommend you start from small. So that's one differentiator from us, because on other protocols you cannot trade with $1, but here you could start from trading with $1, and if you think, hey, I keep making profit, then you could starting from over there. But I think once we upgrade the current system to V2, we could help to mitigate. I think in terms of slippage, we will make some improvement on that.
Sweet.
Yeah. Yeah. I think the slippage right now is actually okay. It's not good. So I think for V2, that's something we want to fix.
Sweet. Yeah, let's get into that. So V2, let's talk about a bit about the tokenomics. So we recently launched the staking. I saw that for Perp token. Is there any integrations coming with the Perp token within the protocol itself? You know, kind of how Binance has like the BNB burns, or you can, if you're a Perp holder, then you get less fees or something like that, right? Is there anything that you guys have thought about on the protocol level with the token, or kind of more focused on the tokenomics usage kind of outside of the protocol?
Yeah, that's a good question. So we do have a plan that we are going to share the fees. So it's more like how 𝗪𝗪 swap work. So 𝗪𝗪, they share the fees with the staker. So I think in the near future we will enable that, so we can share parts of the fees. I think one of the questions we have, and then we are still kind of like monitoring on the fees, because I think the fees we got actually is not quite stable. So I mean, like the protocol got like you know, maybe like for maybe like last week it got like 2 million fees. I mean, like how much should be given to the staker is still, I mean, we're still trying to figure out like what percentage. Should we have a fixed percentage, or, I mean, of course, a staker like you always say like 99%, right?
Yeah, better be 100%.
Yeah, I mean, like, but still, I mean, like, we need some money to keep the, you know, the protocol fucking around. I mean, we have this insurance fund that we need to like prepare for like when the bad thing happens. So yeah, it's just like, oh, so this is in plan, but we don't have a schedule yet. Yeah.
And 𝗵𝗏, I'm kind of confused on what the staking contract does. And I don't think I've used the protocol quite to the extent that Andy has, but if the liquidity providers are, is that what the staking contract is used for, is to stake the liquidity?
No, it's actually not. Yeah.
Right. Okay. So maybe you could kind of unpack the staking contract and how liquidity provision is kept on the platform.
Sure, of course. Yeah. So for us, we can said, we actually the trader provide liquidity to each other. So we don't have a pool that trade against the traders, but we do have an insurance fund. Insurance fund actually pay for the first thing, the bad debt. So when the market crash, so we have, liquidator will come in, liquidate the undercapitalized positions, but sometimes it's just not fast enough. So we have bad debt. So insurance fund pay for that. That's actually the same as central exchange. The second thing is that the insurance fund pay for funding payment. At any given time, actually, our whole system, the AMM, the VAM actually participate in the funding payment. So it might receive or pay out the funding payment. So it actually, so we have this insurance fund trying to cover that. So there is a situation that the market actually crashed. A Bitcoin crashed to maybe 10,000, and actually we accumulate a lot of that debt. So we will withdraw. We will pay it back through the insurance fund. But once the insurance fund is depleted, we will actually mint more token. So it kind of like the staker is the last result of everything. Yep. So So
almost,
that's actually
almost like the safety module, right? And 𝗵𝗶 has a similar setup. So like the stakers are like you said, the last defense, right, before kind of the system breaks. Okay.
So that's how it works. So it's not providing liquidity, just like when things happen, bad thing happen.
Work as this line of defense.
Gotcha. And it sounds like the insurance fund is more prominent in the way that liquidity provision is circulating. So in this case is and this that you might have mentioned this earlier in the podcast, but are people bringing their own liquidity to Perpetual Finance, or is it more of just a virtual pricing machine that 𝗿𝗏 was talking about earlier?
It's actually both. Okay, so if you look at traditional perpetual exchange like BitMEX, so actually they try to do the matchmaking. So they found a taker, they found a maker. So they kind of match these two order together. So it forms a pair. So all the taker need the maker, something like that, right? So all the long position need a short position. So we actually kind of doing that, but we do it through the AM. So if you bring a long, you want to have a long order, you actually place an order on the AM. So we give you that long position. But at the same time, we actually are kind of looking for other people to take short position in the near future.
You need a counterparty for that trade.
Yeah. So the AM itself is kind of like a buffer.
Okay, and normally the way to do that so that every trade has a counterparty is to trade against a pool of stakers, right? Where the stakers are kind of rewarded or incentivized for providing their liquidity, and then the pool always takes the other side of every trade. But that's not what Perpetual does. It sounds like you guys have a different system where the trader actually, like how does your matchmaking system work if you don't have a pool to take this other side of every trade? How do you make sure that each side has a counterparty?
So we don't. So you kind of have a buffer. So we have a buffer of that. But the interesting thing is that So if the VAM doesn't stop, I mean, like you actually always have that buffer. So I don't know if so. It's actually kind of like so that's actually a very interesting design that we I mean that's why we call this virtual AM. Is that we have this everything is virtual. So we actually kind of like mint more token because you want to play. I mean, like for example, like everyone want to open long position. So we kind of like we have a buffer. So we kind of like the buffer. So we have a buffer of lots of long position, right? But if you want to cash out, you have to close that position, or you have. I mean, in the same way, actually, you are placing a short position. So you kind of like close that position. So if we have like 10 people come in, they all want to have long position. So if the first person close, I mean, I close her position first, I mean, like she will earn money because I mean, like she actually sell the instrument at the higher price. But once it close, actually the price goes down. So if all the 10, I mean, like people, they close their position, there will be some winner and some people actually lost their money.
Right.
So that's how you decide. Yeah.
Put it differently. So basically, on a protocol, every trader is trading against each other. So whenever you want to trade on platform, they need to deposit their money into a smart contract. We call it vault, right? And the money inside the vault is how much traders theoretically could get from can win from this protocol. So let's use Alice and Bob as example. So right now we have Alice. She used 100 USDC as collateral and open 10x debits, right? So that means her buying power is 1,000 USDC, right? And then once after she opened this position, and then Bob also used the same amount of collateral to open a position of 10,000 USDC, right? Then after Bob opened his position, Alice closed her position. Then after that, Bob closed his position. In this situation, Alice actually makes the money, and on the other hand, Bob loses the money. So because Alice bump up the price, then Bob also bump up the price. Then Alice just closes her position and drops down the price. Then Bob closes his position and then drops down the price to the original level. So because Alice open her position when the price is lower and close the position when Bob actually had bumped up price. So that's why Alice actually makes the money. Whereas for Bob loses the money. So that's why I also 𝗵𝗋 mentioned that in our system, traders are actually trading against each other. So one trader's gain equals to one trader's loss.
Yeah,
right.
Yeah. Waiting that made a lot of sense in that explanation. And 𝗵𝗋, you had a great explanation to it. It now makes sense. Like the slippage, it's what's moving the price up and down. Someone can capture that slippage either as a profit or as a loss, and it doesn't matter so much the counterparties taking the other side of every trade, because like you said, waiting, everyone is trading against everyone else. So in that sense, the traders are going to move slippage up or down, but that's not going to affect the price or the liquidity on the system, because everyone put in their deposit initially, and it can move up or down based on who else comes into the system and who else leaves. So exactly. that made sense. And it's not so much like a traditional order book or traditional order router that is matchmaking one-to-one, between different people's orders.
Sweet. That's awesome stuff, guys. So what's on the agenda for V2? What's coming up there over the next few months, and then let's wrap it up.
We cannot say much, but definitely I think there are like two things we want to fix. I think one thing that I have mentioned that we want it to be more efficient. So the V1 actually, we got like good trading volume, but definitely it's bound by, we can say we use SYK model. So it's actually bound by K. so in order to get more like trading volume, we need to kind of increase the K, but it also bring in another set of risk. So I think that's a trade-off. So we are, I mean, like kind of like look at like how we can, I mean, like increase the liquidity, increase the slippage, and then even if we do that, the system is still in a good shape. I think that's the challenge we have. So the first thing is efficiency. The second thing is we talk about that funding payment that briefly. So that's actually have a risk to the insurance fund. So we also want to remove that. Yeah. The third thing is we don't have. So right now is isolated margin. So we want to have the cross margin built on I mean, like in the system. There are just like too many changes we want to do. So the last one will be we want to be more like Uniswap. So anyone can launch their own market. So that's actually a huge design. I mean, like a huge change to the overall system. But that's definitely something we want to do.
Awesome. I'm looking forward to it, guys. Thank you for coming on. It was an absolute pleasure.
Yeah, it was really fun.
Yeah, thank you. Yeah, thanks for having us.
Thank you, guys. Yeah, we're hyped to see V2, and I want to engage with Perpetual a little bit and learn a little bit more about these virtual AMMs. I'm gonna dig in.
Yeah, there's some
sure. Yeah, please.
Yeah.
Cool.
Alrighty, guys. Bye-bye.
Bye.
Yeah.
Have a nice day.
Take care.